everybody, welcome back to the channel. We are back on another episode of the Daily Recap. And folks, we've got super investors, the legends on Wall Street, that have officially disclosed their 13F and 13Gs for Q1 of 2025. So the majority of this episode is basically going to be getting into the biggest buys and sells, the ones that kind of stood out to me, and ultimately what some of these big investors are doing. We didn't have a ton of news in the broader markets. I mean, we definitely had some headlines, but most of them not being that consequential. I think what Warren Buffett is doing, what Bill Ackman's doing, what David Tepper is doing, what Ray Dalio is doing probably comprises a lot more in terms of the headlines around where they think the market's going based on how we can kind of perceive it from Q1 in terms of their activity, but also where they think certain stocks have the potential to go. So this episode of the Daily Recap is going to be primarily dedicated to looking at their buys and sells. We got some juicy ones, some really juicy ones. So thank you everybody for being here. Let's get into it. All right, let's start off with the GOAT, the greatest of all time, Mr. Warren Buffett. What did he do? What did Berkshire Hathaway do in Q1? Now, before we get into it real quick, remember, this is all Q1. So this is January to March. They could have sold the positions that they bought in Q1 in the first month and a half of Q2. They could have added more. They could have trimmed some of that position. So it's not exactly an accurate gauge to the T in terms of what they are doing, but it is an understanding if you kind of know the style of the investor, where you can determine and kind of reverse engineer, would they actually be selling this on like a 10% gain, or would they be trimming even more of it? And so I think that's why it gives us a better gauge of how some of these super investors are thinking about the markets right now. Warren Buffett, what did he do? Well, Warren Buffett did two things. Well, call it three things that I think were really important. Number one, he didn't sell any of his Apple. Okay, so 300 million shares of Apple. He did not touch his Apple stake. Apple continues to be one of the largest stocks inside of Berkshire Hathaway. And Apple, by the way, is, if you look at a chart of Berkshire Hathaway with and without Apple, they would not be beating the S&P 500 over the past decade if they did not have Apple. So technology, although it's not a big component of Berkshire Hathaway, Warren Buffett really did need Apple to end out his career to actually solidify his legacy and beat the S&P. And they got in 2016. So shout out to Warren Buffett on Apple, and Apple is still there, 300 million shares. Now, the next two moves that he did, I think, are actually a bit more important. So first of all, he sold a little bit of T-Mobile, 10% of T-Mobile. He sold a little bit more of Bank of America, 7.15%. These are the two moves that I thought were the most interesting. He added 10% to his Domino's position, pizza. So added 10% to Domino's. And then he added to his Constellation Brands, ticker symbol STZ. Constellation Brands Incorporated, STZ is the stock. It was up about 2.75% after hours. They are the holding company for brands like Modelo and Corona when it comes to alcohol and beer. So he added 113% to his position on Constellation Brands, and then added 10% to Domino's. The Apple not touching that makes sense. Selling some of your Bank of America, that makes sense. Trimming some of the overweight position you had in T-Mobile makes sense. Adding to beer and pizza to me is just kind of, I don't really know what to make of it. I mean, it's cool. It kind of is telling me, hey, maybe there's a feeling that Buffett has that we're going to have a recession. And in a recession, people will eat Domino's, right? People will eat pizza. By the way, I don't even like Domino's pizza. Let me know in the comments if you like Domino's pizza. I am not a fan of Domino's. Like Papa John's, to me, at least in the States, is a lot better. I've ate Domino's before. I'm just not the biggest fan of it. But Domino's is an international brand. It is everywhere in the world. So very big company. He added more to Domino's. Maybe if we have some economic stress, people will continue to eat pizza. And then beer, I don't know what the thesis is on that. The stock STZ, I mean, over the past year, the stock is down 24%. Year to date, it's down 14%. I have not gone through their financials or their numbers. I would imagine, I guess, if you have some economic problems, that people would be continuing to drink alcohol. But yeah, outside of that, kind of no real thesis for why he's doing it. So from that perspective, Berkshire Hathaway keeping their Apple, selling some of their T-Mobile, also sold some of his Capital One, selling some of their Bank of America. They've had Bank of America for like 20 years, so that is reasonable to do. But beer and pizza, that is the big move so far for Berkshire Hathaway. Now, one thing that is really important is that Warren Buffett is granted a specific type of privilege from the SEC to buy a stock and not have to disclose what the stock is, because of the ability for him buying that stock and that disclosure to affect the price of the stock. They did this back in 2023 with Chubb Limited. That whole year, I thought he was buying PayPal or Disney or Verizon. I was wrong on all three of those. He was buying Chubb Limited, which is an insurance company. They disclosed today that they are in the process of accumulating a new name that the SEC has allowed them to not disclose. So put it in the comments. I'm going to guess PayPal, Verizon, or Disney again. I mean, realistically, I have no idea what he's buying, but there is a new name that Warren Buffett is acquiring. Let me know in the comments what you think that name is. All right, next one is Hoodie. We got a big one in Hoodie, someone that I really, really respect. I'm very happy to see him enter into Robinhood. Brad Gerstner of Altimeter Capital Management. He also has the BG2 pod with Bill Gurley. I think it's a fantastic podcast. I've been listening to him for the past couple of years. I respect his thoughts a lot as an investor and a technologist, someone who's able to see the future and be able to allocate capital against that future. They added in Q1 2.8 million shares of Robinhood, 120 million, or 2.8 million shares, $120 million worth of Robinhood. Look, I like it. I really, really like it. Now, one interesting anecdote I have around Brad Gerstner is that he's been liking my tweets for the past year. He followed me the other month, and we exchanged a little bit of DMs. Hopefully, I can get him on the channel soon. But throughout the 2024 run that Robinhood had, when it was like 18, 17, 20, 30, I obviously on my X account post about some of the stocks that I own, and Robinhood is one of those big positions. And so I cover the company. I post updates about the company. He's liked at least 7 to 8 tweets, I would say, over the past year around Robinhood. And I remember the first time I got a notification that said Brad Gerstner liked your tweet. He wasn't even following me at the time. And I thought, like, man, this would be an obvious stock for Brad Gerstner and Altimeter to get in, because it's a tech company. They're pioneering in finance. Vlad is super innovative. They have fixed costs, juicy margins. Their net income margins are incredible when it comes to how much money they're able to generate from crypto, because they're able to build such a good crypto experience. They're taking so much market share from the next generation brokerages. Like, they have a really good way of fitting in Altimeter's fund, but he never ended up buying it until Q1 of 2025. It looks like his average is around that $42 range. Stock right now, Robinhood, is at about $60. So shout out to Brad Gerstner. I'm not saying he bought it because of my tweets, but that did let me know that he was looking at the company, right? If he's liking those tweets and liking the progress on the stock and the updates on the company. And so from that perspective, it means we got a new whale in the stock, and someone in the stock who I think is going to understand the thesis on Robinhood for a long time. I'm very excited to see him say why he bought Robinhood, and really cool to have Brad Gerstner in the name. All right, next one, Grabby Grab. Grabby Grab. Grab got some big names into the stock. Grab, again, Southeast Asia. I have a thesis on it. I'll put it in the description. I'm not going to go through the entire thesis, but I wrote up a very long thesis on X, so you guys can check that out in the description. Howard Marks of Oak Tree Capital Management, a legendary investor, $4 billion under management. They added a new position, which comprises 1.15% of the fund, 10,275,955 shares of Grabby Grab. So you got Howard Marks in. Howard Marks, if you look through Oak Tree Capital Management, they don't own a lot of tech companies. They own energy. They own some REITs. They own utility companies, consumer defensive. They don't own tech. They don't have any of the Mag 7. Like, Howard Marks is a credit investor. He's not the type of guy to take a shot on NVIDIA and ride up their growth story. Like, he's not that type of investor. Grab is a tech company. It's Uber, DoorDash, PayPal, Uber Eats, and there's probably a bunch of other names that I'm not thinking of. When you combine all of them together, and a lot of other features that Grab is building to kind of incorporate them into a super app in a region that's growing GDP the fastest at around 5% CAGR, which is the only one that's better is India at about 7%. So Southeast Asia, very prime region where 700 million people need a lot of digital services. Half of those people are now getting online, and 400 out of those 700 million people do not have any bank. They're underbanked. They need financial services. Grab is becoming a fintech along with all the other mobility and delivery services that it provides, which I think is really the gem of the business, growing at about 38% right now. And I honestly think mobility and deliveries are just like a Trojan horse to get people into the financial services part of the business, where the margins are just so much better and they have so much more data on you. They also do advertising. So you could say they're kind of like a Facebook in that they're not a social network, but they have a lot of data to be able to target ads that fuels the mobility business. So there's a lot of technology incorporated in the stock, but Howard Marks doesn't buy tech stocks. He's not a tech investor. This one was surprising to me. Either he's betting on emerging markets, he's betting on a big region. He wanted to diversify from the tariff risk in the United States. Granted, a lot of his holdings don't really have that much tariff risk because they're not that sensitive to tariffs. They're more utilities companies that you would think would be defensive in a recession. Or he sees that Grab has a lot of potential. It's been sitting at a 3-year base for $3-4 for the past couple of years, and it's potentially ready to break out. So from that perspective, I think that was a big one. And then we had Ray Dalio, who I talked about some of his buys and sells yesterday on the daily recap because he was the first 13F, 13G that we got. Just to recap that yesterday, Ray Dalio, his top 5 buys were Alibaba, Baidu, Chinese Google company, Gold, Bookings, and Palo Alto Networks. His top 5 sells were the S&P 500, Google, NVIDIA, AppLovin, and Meta. Today, Ray Dalio added to his grabby grab position by 329%, 5.097 million shares. They first bought Grab in Q4 of 2024 with 1.5 million shares. They now have 6.642 million shares in the company. It's about 0.14% of the fund, a small part of the fund. But I think what's more important is the rate of growth that they had in terms of aggressively adding to their position in Q1 of 2025, now with 6.642 million shares of the stock. So Ray Dalio, Bridgewater, Howard Marks, Oak Tree Capital Management, legendary investors, they now are adding to Grab. Okay, next one is Bill Ackman. Billy Ackman. He didn't really do much, to be honest. So initially when we got his 13F on the market close, if you were live with me, we thought that Bill Ackman had sold all of his Nike because he does not have Nike on the 13Fs anymore. But that is not true. So Bill Ackman did not sell his Nike. He converted all of his Nike, which is about 16 million shares, into in-the-money call options 3 years out. Now, why would he do this? First of all, what is an in-the-money call option? A call option is when you're betting a stock will get to a certain price at a certain expiration. And if it's in the money, that means if the stock is $60 and I buy a call option in 2027 for my expiration, saying that the stock will be $55, I am making an option. I'm making a call on that stock that it will be at least 55 plus the premium I'm paying for the option. So let's say I'm paying $8 for the option because I have to pay for the contract. Instead of having to buy $5,500 worth of the stock, or $6,000 worth of stock, because the stock is $60, 60 times 100 is where I get 6,000. I can pay $800. $800 is a lot cheaper than 6,000, right? And I can make a call option on that stock, which gives me the right to own 100 shares of the company at a future date, which means theoretically, if I'm buying a $55 call option and I'm paying $8 of call premium and the stock is at $60 right now, 55 plus 8 is 63. I am betting that the stock will be a minimum of $63 by 2027. If the stock is currently at 60, it only has to go up $3 for me to be breaking even on the call option. And then every dollar that it goes up, I will be making more on that call option as well. The reason I think Bill Ackman is doing this is because essentially he's saying, hey, I don't want all this capital, about $450 million tied up in Nike stock. I'd rather convert Nike stock into call options, which would be significantly less capital, and have the right to own these 16 million shares in the future if the stock is able to get above the strike price that I'm picking. And given they're in the money, meaning the stock price is below the strike price of the call option, and you're bullish on the company, theoretically, it should be very easy in 3 years he has on these call options via to expire to actually be above that price. Right. So I don't know what price or what strike price he has on the call options, but if Nike right now is 62, I think his entry was at 70. So he might have taken a little bit of loss on selling the shares. And now he's buying these in the money call options, maybe at 55, 60, paying some premium for them. And his belief is that in 3 years, if Nike's not above, let's call it at least 70, then something went terribly wrong. Right. The company did not execute in the way that they needed to execute. So to me, it's rather bullish. It's saying, hey, I don't need to use all this capital inside of Nike. I can convert this capital into call options because I'm so confident that they're going to be above my strike price. And I'm giving myself a deadline, an expiration for it to get there, that I'd rather just wait for it to get there and play out versus have this capital tied up in just the equity alone. Some people could say it's bearish because he's not as bullish on the name, or else he would be adding to the position and just like buying the shares like, he does with other names. But I think you could slice it either way. I think it's not even bearish or bullish. It's just a move tactically that he's making in the portfolio. Now, what else did he do? He reduced his Chipotle by 12.62%. That makes sense. He's owned Chipotle for a long time. He sold some of his Google, but he added some of his Google. There's different types of Google. There's Google Class C, Class A shares. So he basically had a net decrease of 5% of his shares on Google, but he owns a lot of Google. So I think that's rather irrelevant. He just took some profits there. And then he reduced 44% of his position on Hilton. So Hilton is a name, Hilton Hotels, that he has owned for a very long time. That was a pretty aggressive move, selling 44% of the position. So he did take some profits on that one. Uber is the big one that we all know about, but he bought Uber back in early January at 62.63. Uber's now at all-time highs. He has 30 million shares, about a $3.3 billion stake. And he's been very public about his acquisition of Uber stock. And he also bought 20 million shares of Hertz, but he's been public about that as well. So outside of the conversion of Nike stock into call options, we really didn't get that many big moves by Bill Ackman. But he sold some Chipotle, sold some Google, sold some Hilton, loaded up a lot on Uber, loaded up on Hertz. And then when it came to Nike, I guess he's going the call option route versus the actual equity. Okay, last two people we're going to talk about are more in the tech investing space. So we've got David Tepper. If you remember David Tepper on CNBC back in September, he said buy everything when it came to China. He bought a decent amount of China. He manages $5.5 billion. What did he do? He reduced Microsoft by 47%. He added 113% to his Uber. He reduced Alibaba, Chinese company, by 22%, reduced Pinduoduo, another Chinese company, by 18%, and then he reduced Amazon by 3.4%. He did have some other moves as well, but the main moves are basically reducing some of his big tech exposure and reducing his China exposure. I think this is reasonable. I mean, like a lot of these hedge funds and big money managers, essentially the trend I got from seeing everything they did is reduce exposure to big tech. Some of them added more aggressively to the Googles, Metas, and NVIDIAs of the world. So I think it's kind of 50-50. Some of them said, hey, let's take some chips off the table. Some of them said, hey, let's get deeper into these names like Tiger Global, for example. They managed $31 billion. They added a ton of NVIDIA, Meta, Google, etc. But you do have some of these people that have, made a lot of money in the past 8 months, especially, he bought Alibaba when it was like $70. Now Alibaba's $130. That's a good profit. And so they're de-risking a little bit, which is not too crazy. I wonder though, April, which was the beginning of Q2, we had this epic drawdown in the broader markets, right? Down 20%. Meta was below 500. I mean, we had some pretty good, NVIDIA was at $85. Like, so I wonder, we're not going to find out until the end of Q2 what these super investors did in terms of, did they buy that dip or did they kind of sell at the bottom? Because that would obviously suck and maybe they're buying back in. But as of now in Q1, at least, whether it was in February or March, they took some profits on big tech, which is reasonable. But big tech still not the best performing asset of 2025, but also not the worst. Daniel Loeb, this is the last one in third point. He reduced 31% of his Amazon, so sold some shares. He added 12.6% to TDS, which is telephone and data systems. He added 275% to Apollo Global Management. That's a private equity firm. That one was pretty interesting to me. And then he reduced about 47% of ICE, which is the Intercontinental Exchange Company, a ticker symbol ICE, International Intercontinental Exchange. That is the ticker symbol basically for the New York Stock Exchange. It represents that company on the public markets. So those were kind of the big moves that we got from the big super investors. Again, when it came to big tech, you had a lot of adding of big tech. You also had a decent amount of selling, which is fair. And I think that kind of represents how big tech has basically acted over the past few months in regards to it not being super big, but it also not being a super small part of people's portfolio. In terms of NVIDIA, one last thing I want to say right here is that Dan Loeb, the person I was just talking about, also did initiate a position in NVIDIA, 1.45 million shares. So we had a bunch of funds. Tiger Global added 13%, Maverick Capital added 33%. You had David Tepper that sold NVIDIA by about 55%. Daniel Loeb bought NVIDIA for the first time, 1.4 million shares. Viking Global Investors, they manage about $30 billion as well. They added 222% to their NVIDIA position at 6.5 million shares as well. So again, you've got some of these investors initiating the position in NVIDIA, some of them taking some risk off the table, but overall, I think the summary of what some of these super investors did, well, I'll tell you the summary here right now because I have the data. So far, based on all the data that we got, the top 10 most owned stocks are Microsoft, Google, Meta, Amazon, Visa, Berkshire Hathaway, Capital One Financial, Apple, and United Health. And the top buys last quarter in Q1 were Microsoft, Meta, TSM, NVIDIA, Amazon, Google, Wesco International, ticker symbol WCC, Texas Instruments, Uber, and Flutter. So you still have most of these big hedge fund guys that own tech and that are continuing to buy tech. And so far over the past month and a half, we've seen tech continue to rally. And it has been nice for a lot of us that are invested in growth tech to be able to get that momentum back into the markets after the drawdown that we saw in April. All right, that's it for me. Thank you everybody for listening and watching. This is the last daily recap of the week. I just want to say, first of all, thank you for all the love on the daily recap. I love doing this every single day, and synthesizing all this information keeps me really on my toes and sharp when it comes to getting all this down in about 20 minutes. And I really appreciate the love of people supporting. I mean, some of your comments are just like they're just so nice, right? People just saying, hey, I have this on in the background. I love listening to it. This is the thing I look forward to every single day of clicking on the daily recap. So I really, really appreciate all the love and support. And yeah, we're going to keep doing this every single day. Market open, market close, daily recap. Last one for the week. Love you all. Appreciate it. I'll see you guys tomorrow on the market open. And thank you again for subscribing and supporting the channel. Bye, everybody.